Daniel, you don't have the typical Silicon Valley or startup story. You grew up, started the company in Romania. You once said no to $1 billion from Masa-san. So what is the capital going to allow you to do today that it wouldn't have earlier on in UiPath's story?
We have a vision to accelerate human achievement. And this capital is going to help us to continue on our vision to invest heavily into research and development, into our go-to-market. And I believe that we can build a generational company that will completely shape the way people work.
Right, and software, and cloud listings have been very hot over the last year or so. Notably, you guys priced this IPO lower than your last private valuation, which was about $5 billion higher than your IPO price set yesterday. I'm seeing that your latest range is between $62 and $64, about a 14% premium. Talk a little bit about the thinking. Were you worried about leaving money on the table by pursuing especially a traditional IPO when many companies these days are looking at direct listings?
Well, we thought quite a long time if we have to do a traditional IPO or a direct listing. But we believe this is still a great market to raise capital. It's a bit of a choppy market, but we are one of the unique companies that got a lot of attention from the investors. I can tell I enjoyed quite a bit understanding how the IPO process works. I am happy with the price that we got on our float. I am really happy with the investors that we were able to attract in the company. And I think our price, market adjusted, was actually higher than the last round.
Right. But you weren't worried, Daniel, about leaving money on the table? I mean, you're one of the few software companies to price at sort of a more reasonable range. And we've seen the likes of Snowflake, C3 AI, really, really jump on their debuts.
Well, I think on all rounds of investments, you might leave money on the table. And I don't think this is the main question here. The main question is, can you attract the best partner in the cap table? Are they long-term investment? Are they going to sustain the company over a long time or not?
That's a fair point. And as I mentioned at the top, you did say no to $1 billion from Masa-san once. Let's talk about the business. Last year, you were able to grow revenue by more than 80%. How much of that was due to the pandemic and the need by corporations to automate more tasks? And how much does that have to do with companies inside and outside of tech already leaning further into robotics?
Well, I would say that from a revenue perspective, the pandemic was net neutral to us. We've seen solid growth in industries like financial sector, like healthcare, public sector went pretty well for us. But of course, other industries like travel, like retail, were the most affected, and they slowed down a bit their investments. But I would say that the awareness of digital transformation and the position of automation as a cornerstone technology to power up the digital transformation strategies has increased 10 times. And we have achieved a clear market-leading position. And this is a great momentum when many of our customers are making 3 to 5 years decisions. And we are accelerating, actually, and we are poised to get a bigger market share.
Right. So, Daniel, can you sustain this kind of growth? What are you anticipating? And I know that you guys have been cutting losses as well. Do you anticipate that trend to continue? How important is profitability to you?
Yeah, we continue. We always have invested heavily into our growth. In the same time, we learn how to operate this company with rigor. And our long-term strategy is durable growth and operational efficiency. We intend to drive this company for next few years into the net cash flow neutrality while providing really durable and sustainable growth.